Friday, December 17th, 2021, Maneco 64, home of alternative economics and contrarian views. So yes, the Bank of England, they've surprised people again. They surprised everyone in November by not raising interest rates. This time around, yesterday, they surprised everyone by raising interest rates. Yes, it's not a bad thing that they've raised interest rates. At least they acknowledge that there is an inflation problem, and I'll give them that. But I don't think they're really committed to fighting inflation and to keeping the currency stable. And why do I say that? Well, because of what they said after the meeting, some of their comments. I think not just the Bank of England here, but all central bankers right now, especially in the West. And why just in the West? Well, because they seem to think that they're above monetary laws and that they can keep inflating away, and that people will be okay with it. And that these phony measures of prices, which they call inflation, are going to come back down. Just because, yes, a lot of times things don't keep going up in a straight line, and they do correct, and they could be right. But I think they're running monetary policy on hope that no one notices that they're being like robbed over the years by this inflation. Bank of England is hoping that after we get to over 6% in terms of CPI, and that's not even looking at the RPI, which is, I would say, a much better indication of inflation. That's running at over 7% already. They think that after we get to 6 or 6.2, wherever their forecasts are, that we're going to magically come back down to 2. But 2% is still inflation. It's still a tax of 2% on your savings. And in the meantime, it's going to be a lot higher. And yes, I think they also took the opportunity to look a little bit different than the Fed and also the ECB, and flex their muscles, so to speak, and say, yes, we're fighting inflation. But yeah, my analogy for them is that they've taken out an umbrella for a coming hurricane, for a really bad storm. They've taken out an umbrella, which is basically a useless tool for that kind of storm. So let's quickly look at why I think they've done this, just to placate the markets, so to speak. So let's quickly look here at the article that came out yesterday when they raised rates. It's from the FT. It says, Bank of England raises key interest rates to 0.25%. Borrowing costs increase from 0.1, right? As central bank highlights inflation risk. And if you go through what they say here, you will see what I mean, that they just want to, they're doing what's called forward guidance, trying to keep the bond markets from dropping too much, prices and yields rising. And I have to admit, they were successful. UK government yields are still really low. They're still like under 1%, even for the 10-year gilt. But I don't know if this is going to stay like this forever. But it's what's called financial repression. They're stealing from savers. And who's benefiting from this? Well, it's the government, the biggest borrower in the realm, so to speak. Well, it is the realm, isn't it? But it says here, Bank of England has raised interest rates from 0.1 to 0.25 in its first increase in more than 3 years. Yes, they had raised rates after the '08 crisis, years after, and I think the highest they got to was 0.75%. I think they might get back to that level maybe next year, maybe to 0.5, but not much more. Saying that the risks of inflation required preemptive action even as the UK is engulfed by the Omicron wave. Surprising financial markets on Thursday for the second consecutive month and voting 8-1 in favor of higher interest rates. The bank's Monetary Policy Committee decided it could no longer wait before trying to cool spending in the economy. We've seen evidence of a very tight labor market, and we're seeing more persistent inflation pressures, says Andrew Bailey, BOE governor, after MPC meeting. I like the way that they kind of implied that it's all the fault of people working. And it could be a little bit, because a lot of the jobs that have been created are government jobs to test and trace, to vaccinate people. So they're not really wealth-producing jobs. Yeah, they're just consuming capital jobs. They don't create any increased productivity or anything. And here's the part where it says, admitting that inflation was heading up to around 6%, he added, and I quote Bailey again, "We're concerned about inflation in the medium term, and we're seeing things now that can threaten that, so that's why we have to act." Well, I think if he really wanted to stop the inflation, he would have raised rates maybe to 1%, straight to 1%, and say, we will continue to act accordingly and aggressively in the next few months or in the next year. Then the whole bond market would have gone haywire, I would say, and we'll come to why he can't do that in a minute. And here's the part where he's trying to control perception, trying to say, we're under control still. We'll have a few more of these tiny rate hikes and everything will be okay. Says further modest rises in interest rates would still be needed in the months ahead, the MPC said. That's the Monetary Policy Committee. It's the committee of these 9 people who vote on policy to keep inflation under control and bring it down to the BOE's 2% target. So there you go. And why can't they do what I said they should do? Well, because businesses are already complaining. It came out yesterday on Bloomberg. UK businesses warn of hit from Bank of England rate increases. UK businesses warn that the BOE's decision to raise interest rates will add to costs and may deter investment as they grapple with new restrictions to contain the Omicron variant of coronavirus. That's the other thing, higher financing costs. They increase costs. Increased costs means higher prices. And here's the kicker of why it's so difficult now for the Bank of England to really fight inflation. And by that I mean by raising rates maybe to 6 or even 7%. That's how you kill the inflation. It says the move will also increase immediately the annual bill for servicing the national debt by £1.3 billion. So that's on an increase of 0.15%. So you do the maths and you can see how government wouldn't be very happy with an increase of 1% and affect just over 2 million households with mortgages. Those are the people on tracker and variable mortgages. However, George Buckley, UK economist and Nomura International, said the aggregate economic impact of the hike would be minimal. Business groups said the increase in the BOE benchmark to 0.25 may push some companies into difficulties as they deal both with inflation. They call it cost inflation. No, it's inflation. And new virus curbs that are already hitting sales in sectors such as hospitality. So there you go. We'll stop at that. Before we look at the markets, yes, yesterday I spoke about Russia and China declaring independence from the dollar. That doesn't mean they can't still deal in the dollar. They might still have to deal in the dollar if they're dealing with the U.S., of course. It's just that amongst themselves, right? And I spoke about Brazil, how they're getting into the gold game. Interestingly, late yesterday, Brazil actually announced that it's expelling the IMF officer, or they're closing down the IMF office in Brazil. It's out in the FT. It says it's overgrowth forecasts. I think that's the excuse they give. And from June next year, then that IMF office in Brazil will be shut. I think that's significant. It shows that Brazil wants to move in another direction, or have options at least. Brazil, of course, will still deal in dollars and need to have dollars as reserves. Maybe one day the United States might need to have Brazilian currency in reserves, but I think they're moving also towards the Chinese, Russian axis, so to speak. They want to have options, so I just wanted to show you that there. And what else yesterday? Oh yeah, big news overnight, of course, here in the UK. There is a saying, and that's why I don't like politics. Someone once said, I think, if voting mattered, it would be illegal. But albeit, though, we had this by-election in Shropshire for Owen Paterson. Owen Paterson was the MP. He had to resign a month or so ago because of corruption, a corruption scandal. They never use that word here in the UK, corruption. They call it sleaze, but it was corruption. So they had a by-election yesterday. The Tories had controlled that seat, that constituency, for 200 years, and they lost to the Liberal Democrats. It was a referendum on Boris Johnson. So it is slightly positive in that the public is saying, we don't like what you're doing. Does that mean we're going to regain all our freedoms and the fear is going to be gone? I don't think so, to be honest. I don't think it matters which party is in power anymore. But at least it shows that the public is not happy about what he's doing. And he might pare back his authoritarian moves that he's making right now. So we'll have to see. So that's the other piece of big news. A seat that had been Tory for 200 years has been lost. Turnout wasn't very big. The proportion was only 46%, and the Liberal Democrats won. I don't think they're very different from Labour or even Conservatives in terms of what's going on health-wise with this crisis. I don't think they're going to be like Rick DeSantis or a red state. And anyway, it's just one seat. But we could see the Conservative Party, the Tories, kick out Boris Johnson as their leader. So they'd have to find a new leader. We could have a new prime minister. That's a possibility. More uncertainty. There you go. Not great, I would say, for anyone or for anything. So with that, let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. I see that gold and silver have continued to move higher quite nicely, I would say, after the move down right after the FOMC announcement on Wednesday. We've completely turned around and we've broken through 1800 overnight right in gold. We're at 1808.50 right now, up another $10. The high's been 1810, the low 1797, so up 0.5% right now. Silver is catching up a little bit here. It's up just over 0.5% as well. We want to see silver outperform gold. We need to see that happen. Silver, though, is at 22.61, up 13 cents. So, yeah, pretty sharp move higher from like 21.43 right after FOMC meeting or statements. I noticed yesterday that the stock markets did not manage to keep their gains. I mean, they did well on Wednesday after the FOMC, but yesterday it was a bad day for the NASDAQ. It dropped 2.5%. The Dow was up quite a bit, triple digits, but it managed, it didn't manage to finish up on the day. It finished down 30. And this morning, as I speak here, the Dow is up 28 points, so not much. And the NASDAQ is continuing to drop further. It's down 80 points or 0.5%. S&P is down about 5 points. To the currencies, yes, sterling did rally quite strongly yesterday. After the surprise, it rallied about 0.8%, but that rally actually fizzled. And I think we finished up only 0.4%. I expect the weakness in sterling to continue. And yeah, because I don't think the Bank of England is that serious, as I said again, about fighting inflation. And I see here that the price of gold in pounds has gone back above 1350, which is an important technical level. So right now, sterling is unchanged, 133.20. The euro is up slightly, 113.30. The dollar is down about 0.1% versus the yen, 113.56. And the dollar is up slightly versus the yuan, 638.11. Aussie dollar is down 0.2%, 71.68. The US dollar is up slightly versus the Canadian at 127.86, and the Kiwi dollar is down 0.33% at 67.76. Just quickly look at the commodities. We got WTI crude down 1.2%, 71.22. High-grade copper is up 0.33% at 4.32. And natural gas is down, US natural gas is down 2.4%, 364. European natural gas prices are still near all-time highs, or if not making all-time highs. So nothing really positive there for the consumer at the moment. And just to finish off, let's quickly look at the 10-year yield. We're at 1.42%, so we've even drifted lower since yesterday morning when we were around 145. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day and a great weekend. Take care. Bye.